Now we're ready to rock and roll. So with the IBs, this morning I was watching it as well, and one thing I noticed with the range is that usually around like 10 or so, we can kind of spot that high and low. And now I'm not acting like I'm some sort of expert or anything. This is just my own observations. But we've seen Mr. Zink front run. Um, we've seen other people front run too. So don't necessarily have to wait right till 10:30. But what I noticed about right around here, 10:05, I had my. Let me just put this back for a sec so we can see. This thing's gonna. Let's turn it off. And let me just put on the 0 and the 1 so you can see the anchors. Okay, so this is what I had anchored. Okay, I was watching this, and I just kept kind of lowering the anchor on the actual setup. And even right here, so this is about 9:59, and I started seeing price spike higher, right? And once I saw that going higher, I thought, okay, this is the front run entry. This is what we've seen this happen many times. Now here's the thing: price literally front runs 24,540 right here, right? Um, this would have been at 24,528, so about $12 front run, and so you get the front run. Now, if you had actually entered with the front run, and I think some people might have done that, then you would have had TP literally minutes later. But for those that didn't, they just kept lowering the IB range, right? And then this happened. Another front run. This went to almost about 54,520, so about $10. And then price ends up going back lower to where the IB low is. In my opinion, I was watching this and I thought, there's no way this is going to continue to set up even after 10:30. I just had a feeling like this trade setup is going to be cooked. It was just a hunch. There was no real logic behind it. And then of course we start seeing price go lower. Let's just keep forwarding this. And then this happens, right? So then we start getting the recovery. So then everyone's probably wondering where the EQ is. EQ is right around here. And then the rest is pretty much history, right? Because then we get this. And then price basically cooks it. Okay. So you'll also notice I have these quarter ranges added as well. And you can see price respecting this. And I've talked about this in the last live stream too, where, if you start seeing price put you into drawdown like this, you can use like general support and resistance to just see if like these levels are being flipped from resistance into support, because if they are, you can pretty much exit before your TP hits. Now, will it impact your results? I mean, I think it just all depends on whether you re-enter. If price were to go lower and you re-enter here and try again, because then you would make that back. But I mean, ultimately, that's up to you. But I'm just saying, like, you could see this thing had flipped support into resistance. Now, so that was the first thing to talk about with the IBs, was just the way price was front running the EQ at this point. For me personally, when I'm looking at these IB setups, I'm finding, like I said, within the first 30 minutes, that range gets set. And then, from the 30-minute to 45-minute mark, sometimes you can catch, or if not most times, you can catch that front run and get in and out of the trade before the final range is set, right? Like, so in this case, because it's the New York session, it would be 9:30 to 10:30. So, because I've actually taken a trade like that, and I got in about 10:15 or so, and then price ran to TP before 10:30, and then the 10:30 low forms, and then the setup is pretty much invalidated if you had waited. So I don't know if there's like some sort of specific, rules per se. I mean, we're kind of going off of what we see Ash do and what we see Mr. Zink do, and we kind of just, copycat what they're doing. And I mean, Mr. Zink's obviously successful doing this, right? a front run IB equal an orb. I mean, I know it's kind of similar because we're dealing with like time ranges, but I mean, I'm not fully versed with orbs. I think with orbs, it's more of like a breakout strategy, if I'm not mistaken, or even if the orb time range gets broken, then you'd enter on the re-entry, or sorry, you'd enter on the retest of the orb, whatever, if it was high or low. But I wanted to just show this. The second thing to discuss about this, and I mentioned this in the chat, was adding the moving average, the exponential moving average. So it's an EMA and changing the length to 200. Now, by doing this, let me just turn this to black. And I'll just move this right about here. Now, if you look at where the 200 EMA is located right now, and this is like I was saying to you before, where we had the front run happening, right? So, does anyone know what the 200 EMA is? I'm hoping you do, but if not, that's cool. If you don't, 200 EMA is basically, 200 candlesticks, depending on the time frame you're on. It'd be 200 of the previous candlesticks, and then the price average marked as a line. The EMA is a faster moving average. The simple moving average would be the slower one. So if I were to put the SMA up here, so simple moving average, you'll see the difference here. Let me change this to 200. I'll keep the line blue just so that there's a discrepancy. But you can see the discrepancy in the two moving averages, right? Whereas the EMA is faster than the slower moving average. How is that calculated? I mean, I have no idea. You probably have to ask ChatGPT. I'm sure ChatGPT will give you a better answer than what I'll give you. But what's really interesting about these moving averages, and I've seen some traders actually use both the EMA and the SMA for the 200, and they kind of watch the trend on it. I'm a big fan of EMAs. I mean, you see it on my charts, especially during live streams when I'm showing things. I do keep it primarily active with my split screen, just because I have more wiggle room to do things on this screen. But going back to where was it? Oh, right here. So just going back to the moving averages, the thing with the 200 EMA, and we'll just use the 200 EMA for now, but typically when price is moving flat like this, or sorry, when the moving average is flat, that's basically showing us that there's consolidation, right? Now, keep in mind, this is like a hindsight indicator, but you have to kind of use it to understand the strength of the trend, right? Because this is plotting the previous 200 candlesticks, the average as a line. So the thing is that if we see price doing this, and we want to obviously take that short, right? Because we have the high formed here, we have the low formed here, and maybe there's a front run. Notice how price is respecting that 200 EMA here. So if I hit next, it's no surprise that we're rejecting here, right? If price were to respect the idea of going lower, and then sure enough it goes lower. So if you're trying to front run this, or even if you had your limit set here and you keep getting front run, it doesn't hurt to just enter with 50% position size, and then if it goes higher, you can add to that position potentially with the full position if you wanted to. But in this situation, it never went back up, right? Now, if I keep hitting play, let's just see what happens next, okay? So we know that the anchor gets set at about 10... What time was that? 10:29, we get the low set. Now, I just want to show you this. So in order for this to work, price needs to respect this 200 EMA. And when you start seeing this happen, this is basically looking like the trade's cooked, right? Like, that's pretty aggressive. Bullish engulfing candlesticks with no wicks, right? Pretty much. Like, those are strong body candlesticks. If anything, this is just going to get flipped into support, right? And now you can see how it's following the trend, right? Now this is showing us now the trend has been flipped bullish, right? So my point, what I'm trying to get at here is there's the potential that we can actually use the 200 EMA or even the 200 MA, whatever your choice is, right? I mean, they're both pretty much, fairly similar in terms of, what they're doing. The reason why you might want to use an EMA over a simple moving average, which is a slower moving average, is that, and this is when I was studying like actual people who are chart technicians who have like that diploma in it. I think it's called CMT or something like that. But from what I studied and learned from people who were certified that way, they would always tell me, because I had asked questions, but they'd always tell me that if you're using like a lower time frame, to use lower time frame, or like to use faster moving averages, so an exponential moving average. And if you're on a higher time frame, to start using the slower moving averages. Now, there's no hard rule. I mean, I've used EMAs on the weekly time frame, and price respects things pretty well with crypto when I was looking at Bitcoin, for example. So I take it with a grain of salt, but I'm just letting you know that that is something that was shared to me a long time ago. So I kind of always have that in the back of my head, but it's up to you to kind of put them on your chart and figure out what works best for you. So once again, 200 EMA comes on your chart. You can identify if you're trying to go short, then price needs to keep respecting that 200 EMA to move lower, which is why you see the actual entry for this setup in hindsight. And I say it's in hindsight, but even when I was watching it, I could tell this thing was cooked. And like I said at the start, I thought this was cooked because multiple times this thing failed to hit the EQ and then ran to TP here, right, which is the low. But you can see it respected the 200 EMA and then rolled over. That's what you want in these types of setups. Let's go to a different setup, which is like during Asia, for example. Let's check out yesterday's setup, because yesterday there was a really nice setup that occurred with the Globex time frame range, IB time range, which is 6 to 7 p.m. I'm just going to go here. This is that trade that Matt absolutely smoked. Insane trade. Absolutely insane trade that he held out for as long as he did. He netted almost $7,000. Absolutely crazy. So let's set the range. Here's actually, where are we here? Okay, here we go. So I was going to use the 7 o'clock range. I just realized, let me just go to a higher time frame. It'd just be way easier for me. Okay, so here is Monday, 6 p.m. Here's the open, and then let's go to right here. Okay. So keep in mind, I'm not using the EMA on any other time frame, like the 5-minute or the 15-minute. I'm only using it on the 1 minute. Okay, and I just want to show this to you because it really stood out to me. And I'll just hit this for a second, just so we can see what the lines look like as price starts to move from the high to the low back to the EQ. Okay, so we have the 200 EMA in black. We have the 200 SMA in blue. And I'm just going to hit next here. So this is the setup, a lot of us took yesterday. We all caught W's on it. Some of us exited early. Some of us held it for longer extensions below. But what I want to show you is this. Price tags the EQ. Look at where the 200 EMA is, right? See how different it looks from what we saw today for New York session? It's already slanting down, right? Looking like a 4 o'clock position. Slowly starting to curve, but let's hit next. Okay, so even if you miss this entry, here's your next entry. The idea is that you don't want price to obviously flip the 200 EMA, right? Or even flip this range. And what you end up getting is full respect. So to me, I was thinking this might be a great way to use the 200 EMA or the 200 SMA. You can see why the SMA is not something I would use. I'd rather use the 200 EMA. We're trading, like this thing's on the 1 minute time frame. We need faster moving averages to let us know what's happening. And you can see the 200 SMA is not really telling us much or telling us something different that the 200 EMA is not already telling us. So I'm just going to disappear it, because we don't need to have things on our chart that just cause confusion, right? Or that might contradict the idea that's in play. So for me, when I'm looking at this, once again, the idea is that we want these trades to align with the 200 EMA. So if I'm running a short, I want price to be below the 200 EMA. And if I want to go long, like, price should be respecting the trend of the 200 EMA, going the other way. I heard Mr. Zink in one of his videos, I think he had shared it about 4 months ago, but he was referring to the, because I was looking up videos of his specifically related to Globex time frame. And one of the things he talked about in this video, which was about 4 months ago, I was watching it this morning, was he was talking about the trend, how the trend is so important for this type of a model, and that it's not suited for reversal trading. And when I looked at it in that context, that's when I thought about the 200 EMA, because once again, I like using moving averages in terms of identifying that trend. That, to me, that's the greatest way to identify a trend, is look at higher time frame moving averages. And sure enough, when I looked at the 200 EMA, I was like, okay, the 200 EMA is definitely telling me a story. Okay, let's take a look at another date. Let's go back to Thursday. And we're looking from about 6 to 7, right? So here's 7, so the high is right here, right? So in this situation, the idea is that the lows form first, then the highs form next, right? So we're taking a move off the EQ, and we're trying to get back higher. But if you look at what happens, I don't know how this plays out. Does it go any higher? What does it do? So the thing is, this barely hits, it just misses hitting that stop loss level. So if you were taking a long, you can see how the 200 EMA is holding price down, right? And then eventually, looks like it would have hit TP, right? But you notice how it had to flip the 200 into support, right? So in a trade setup like this could be a potential filter, right, to use. Like, if I want to go long, maybe I don't want to go long seeing that the 200 EMA, with price being below the 200 EMA, it would save me all of this headache, right? If we're using the 7 to 8 p.m. IB window, which is Asia, that would be here to probably about here, because 8 o'clock is around there. Actually, there's the low here too. So let me take that back. So this is the high, this is the low. And if we analyze what's happening here using the different IB, right? And I'm only showing this because I just want to show how price moves within these ranges, because it's important. But, you know, price is below the 200 EMA. But what ends up happening in this trade is that you can see price is respecting the 25% fib here. And then eventually this short idea would get cooked. So depending on what IB range you're using, I don't think anyone's really using the 7 to 8. I think most people are using 6 to 7. So I'll just, I guess, focus on that specifically because it is the more common IB to use for, you know, when the Asia market opens. But once again, the whole idea with this is maybe using the 200 EMA as an additional filter to help put you on the right side of the trend. So even though the low formed first and then the high formed second, meaning we want to look for a long off the EQ to the IB high, given where the 200 EMA is, maybe it's a good idea to skip this trade, right? And if you put both of these EMAs, or if you put both of these moving averages on, the EMA and the SMA for the 200, you can see how they do create a bit of a trend, right? Or a range, I should say. And that range is respected whether it was from the bearish perspective or even when it's flipped into the bullish perspective, right? Or the bullish view, whatever you want to say. So just wanted to throw that out to everybody. Take some time, if you're trading IBs, just slap them on your chart. Take a look at, what happened on these days. Let's take a look at, the morning session. So 9:30. What happened here? Go to this. Just going to delete everything for a sec. What we can do is actually just check what happened yesterday first during that morning session, just to see if we can find more proof to what I'm talking about. So 9:30. And then price keeps going higher, and then this is about 10. So here's your anchored high, right? So if we're looking to go long, the trend is in our favor, right? All we needed was price to actually tag this, and then the trade gets invalidated here, right? So you can see how that idea would have worked. It's just the setup didn't form there. So that's fine. That's going to happen. No big deal. Let's check out Friday. So Friday, here's the low. Let's look at this for a second. So here's 928, and then we have 930 here. This would have been about 939, so I probably wouldn't have touched anything there. Then we have a new low set, so that's fine. And then we have the high set here, right? And then this would be 1002. So this is still technically the high. And if we're looking at now this type of a setup, so this would have been yesterday's setup. Last week's setup on Friday, excuse me. What's interesting about this setup is the position of where the 200 moving averages are located, right? Because price is below both of them, but they look like they're flipping. And the thing is, price needs to obviously break through here, which it does. So in a situation like this could be, like, no one knows what price is going to ever really do, right? Because this could have easily hit this and then did this, right? There's no way of really knowing. So this is kind of the risk we take. But if we add some market structure to the mix, right? Like even if you add, the 15-minute or the hourly, it can perhaps give us a bit of a better picture, right? Someone had mentioned this actually in the Gen chat about using market structure, right? Like knowing, like not to short at sell side liquidity levels, right? Like we would never do that. So even though we have an IB, would we still want to be taking a short IB setup at support, right? At a sell side liquidity level? Probably not, right? Like if we use common sense trading a unicorn, like we would never do that, right? So why would we do that in this situation? So if we even, if we look at it from this way, we swept an hourly level, setup forms a nice, beautiful range. Got about 158 points, not bad. And then what we get is price, once again, bouncing perfectly off the EQ and then going straight to TP. And you have that you have that H1 sell-side liquidity level acting as, some level of confluence that you should be going long from this area, not going short. Does anyone have any questions about this? If you do, drop it in the chat. Hope it makes some sense. It was something I thought about earlier today. Just wanted to share it with everyone. So I'm just going to go back to NQ now. Ali, what's up, brother? Have I checked out the Globex IB Open? Yes, we just did that. We just did that, my friend. What's the setting used for the 200 EMA? Did you just set the length to 200? That's correct, man. Oh, Ellie, no worries, man. I was just showing how the 200 EMA can be used to help us identify the trend. So if we're taking a long, maybe we want to use some market structure as a filter, right? So if we're wanting, if we want to go short, we don't want to be shorting from sell side liquidity, right? Higher time frame sell side liquidity. We want to short from higher time frame buy side liquidity. So it could be 15-minute, it could be 1 hour, it could be 4 hour. And then the 200 EMA is just merely another filter that can be used to put us on the right side of the trend. So if we're going long, ideally we want to be either as close to the 200 as possible, like I just showed with that last example, or we want to be above the 200 EMA, supporting the idea that the trend is bullish, right? And the 200 EMA is giving us a higher time frame idea about the trend. So I hope that helps. Smoothing length should be at 200 or 0. Smoothing length. So EMA, type in EMA in your the trading view indicators. Click on moving average exponential. Go to the settings. All you're going to do is just change this to 200. That's it. And then you can change the style. That's it. That's all you got to do. You're not looking at smoothing components or anything like that. That's it. Okay, so just add that on there and all will be well. No worries, buddy. Let's take a look at what's happening, because I got alerts firing off. I like to tape read, of course, as you know, which is something I want to start trying to do more of during the New York PM session. So what's happening right now with NQ? Let's take a look. So here's NQ, and right now, this level got destroyed, which was a 15-minute buy-side liquidity level, and now prices tagged London high. So, being that I'm an IFVG trader, I'm looking for a strong reaction off of these higher time frame liquidity levels, and I'm looking for good momentum confirming an IFVG. I also want to make sure the setup is singular. What does that mean? I mentioned this yesterday, but I don't want to see FVGs below my entry, right? Like this. This is what we call non-singular. What I want to see is singular. I don't want to see these types of FVGs there. So this to me is not a very clean setup, because we want price to reach for something, right? And if the drawn liquidity is literally right underneath where price is, where our entry might be, price could just rebound right off that and go straight to stop loss. So it's not a very highly probable scenario. So seeing what's happening here, I don't even see an IFVG. If I don't have access to the 30-second chart, but there could be a setup here in the 30-second, just given the way this is rejecting here. But I mean, this is a really nice rejection, right? This is a strong, or this is an instant reaction, right? This is what I would define that as. But once again, there's no IFVG here to work with, and then it's non-singular anyways. So even if there was something here, I would probably not touch it. Did I have any trades today? No. I was watching a short. Now what I'm going to do is just keep this open. I'll go to another window. I just want to make sure that if alerts come firing off, I can quickly go back to NQ. This is the split screen. Let me move this over here. And this is the other NQ chart, so I'll take that off. Okay, so setups for today. What did I see? Basically, I showed up to the chart around 8:30 today. Okay, so this is what things look like at the get-go. Let me get rid of the IB stuff. So at the start of the day, I was waiting for, sell-side liquidity levels to get swept. The daily EQs right here. So, technically my bias is bullish because we're beneath the daily EQ. So I just watch what price is doing. And as we get closer to 9:15, I'm going to be a little bit more cautious and hands off. There's no need to force any trades before the open, right? It doesn't make any sense. So I just waited for the open. We didn't really have any news today. We already know Asia and London had a massive range, right? So what does that tell us? We talked about daily profiles the other day. One of the daily profiles we talked about was Asia having accumulation, London having manipulation, and then New York having expansion, right? But in a day like today, this is just a day where you have consolidation during Asia, and then you have a complete expansive move to the downside during London. So usually when we get expansive moves, as Matt has often told us, whenever you have expansion, what comes next? The answer is you either get consolidation or retracement. back to the EQ or the mean of the range, right? So 592 points. You can't expect much to happen during New York. It's not to say something can't happen. It's just you got to have some expectations and things to be realistic, right? Just taking a look at the chart here on the 30-second. Oh, thanks, Steve. Look at you, baller. 30-second. Oh, that doesn't look good. A little tight, right? It looks like maybe a continuation play on the 30-second if it goes higher. That's pretty funny, right? You were looking at it right here. That could be a continuation play looking for price to go higher. Someone was talking about that yesterday. Okay, so where were we? Oh, look at that. There's your continuation play. Boom. That's funny. And like I said, I don't really take continuation plays. I find they never work for me when I take them. But when I'm paper trading them or tape reading, they work. It's funny how things work like that. But anyways, it is what it is. Let's just quickly go back to... You know what I'll do actually before I do that? Let me just set an alarm. A couple of these levels just in case they get tagged. Then we know there could be a short waiting for us. London's already been met. Now, I mean, this can still roll over, just just as a heads up. This is where we can start looking at ES, and I'll show you what I mean. So often we talk about SMT, and I apologize if I'm kind of going all over the place. It's just there's a few things happening in real time. I just want to address them. So in this situation, NQ tags London high at 1328. And at that same time, ES misses it. Price is now running higher, and now ES has tagged London high. So there is a good chance that, and if ES is going to start pulling lower now, like to reject off this key level, this could pull NQ down. So the idea of using a short is potentially valid. Of course, we have additional levels up here, so we have to observe what ES is also going to do. So. But this is how I would kind of use ES on the split side. So let's go back to NQ solely so we can see what's going on. So now in a setup like this, I'm going to just kind of go between the 1 minute and the 2 minute. And obviously I'm not going to use the 3 minute because the 2 minute is still pretty clear. But I will only really use the 2 minute if the 1 minute starts to get muddled, right? So in this situation... Here's your setup. Now, you're probably wondering, well, there's still FVGs down here, right? Does that mean it's singular or non-singular? And to me, because you have these swing points here, these lows, I would then say this is actually a singular setup. So if you have a 41-point stop loss, you'd just basically be targeting down here. Now, of course, we don't know what's going to happen here, and this is where maybe then moving to the 2 minute might make more sense, right? Because if we move to the 2 minute, this might give us a safer entry. Because you can see now the 2 minute doesn't have any of these gaps. The gap is right here, and that's where our TP could potentially be. So we can kind of use a combination of both in this scenario to help us. So I'll keep an eye on what's happening here. You'll notice the indicator never put a alert out on this because price already respected this right here, or because the indicator is not even on my chart. There we go. That's funny. Okay, that makes more sense. Okay, so it is showing it. Good. Because it should show it. You can see it right there, right? Also showing us London highs, a 15-minute buy-side liquidity level. And it looks like price is going to go a little bit higher. Finance says, I took the IFVG short on ES at 934, but missed the real setup at 1030. Wouldn't take it again because I shorted in premium. Shot myself on the foot today. Let's see. Yeah, there was actually a... I thought there was a long, actually, today on ES when I was watching it. So 934, you took that short up here. So the thing I'll say about New York Open is I think it's important to let time just pass a little bit, like let the price action breathe, because often there's a lot of wicking going on. There's a lot of manipulation and fake moves happening. And even though we want to use that manipulation, you don't want to get manipulated out of position, right? You want to make sure you're catching the right side of that move. Exactly, Steve. You could wait 50 minutes. I mean, it depends on what you're thinking. But like to enter a few minutes after, like, I mean, this is a great example actually because it is on ES. But here's 930. If you're looking at this, there's an FVG right here, and you're thinking, oh, this is perfect. It closed right through, and then here's the next leg of manipulation, right? So if we consider what Steve is saying, waiting 15 minutes, this is about right here, right? So you avoid all of this, and then you would just be entering here, right? Now, don't mind these EMAs and stuff, but like here's the right FVG to use. So just having a little bit of patience at open protects us from taking like an unnecessary loss and just letting price breathe a little bit. And then you get a setup right here, right? So this would have been a nice candle at 941 to catch, potentially, if you're trading ES. I'm personally not trading ES, but that's what I would do. Now, you said the real move was at 1030, right? So we know that there was a play here. If I go to the 2 minute, I'm not sure what that looks like on the 2 minute. Maybe it's a little cleaner. Yeah, it took a lot of candles to form, I'm not going to lie. I mean, to me, if I were to have used something like this, I probably would have used the 2 minute just because of where the candle closes above the EMA here, or sorry, the IFVG, excuse me. But, you know, that's a massive IFVG as well. But right here, you can see the entry's pretty close to that, right? So, and then your stop loss could just be below here, and then you would just aim for the highs, right? If you go to the 1 minute on ES, just get rid of some of these moving averages for a sec. Is making things a little harder to see. So like if we look at the 1 minute, it's that same level there, but if you compare how clean or messy things are, like price action is, like this is not what we want to see inside of a IFVG, right? So if we go to the 2 minute, even though this is still hella choppy, it's way cleaner than the 1 minute, right? But the only reason why we wouldn't go on the 3 minute, even though the 3 minute would look even cleaner, is because of look at where the 3 minute closes, right? You want to try to enter around here, not up here. So that's how I was analyzing ES this morning when I was watching it. So price is just going higher. Is there any higher levels on ES to look at? So Asia highs there, and then we got previous daily low, which obviously we've swept already, or actually we haven't swept. That can't be right. It must be previous daily high. I must have typed that in wrong. Yeah, I did. That doesn't make any sense. Must have clicked the wrong button there. Okay, there we go. That makes more sense. So price does have something to reach for right now on ES. And if I compare it to what NQ is doing, and I'll just close this off for a second. You can see my alerts are all firing off. So let's get rid of that. Let's get rid of that. Let's delete the alert here. So we got a 50-minute swing point here. We have another, we got equal highs up here, and we have Asia high up here on the left for NQ. And then on ES on the right, there's Asia high that's still there, and then we have previous daily high and a bunch of hourly buy-side liquidity levels. So there is a lot of liquidity up there to purge. Setups could form from up there, of course. So we'll just wait and see what happens. We'll just keep marking things off as we see them. So this is about a 2.75 point IFVG. Could be hella risky to take that. It's really small. And then also given where ESs, you know, we want to see if a reversal is going to happen on NQ, then we need to start seeing ES reversing from a key level as well. So I'm just going to go to a bit of a lower time frame just to see what things look like on ES at that London high, because we want to make sure that if this goes higher, then taking a short here doesn't make any sense, right? So, finest on that setup with the 3 minute, I'll show you something. Now, I know it worked, but there's something I always talk about, which is, once again, singular and non-singular, right? This right here is what makes it non-singular if you're entering on this position. I know you just mentioned that in the chat, which is great. But this is why I then would use both, right? I would connect the two FVGs together and create it as one range versus a single range, because we don't know what price is going to do here, right? Like you can see it's reacting from this level. This could have easily gone lower, right? Of course it didn't in hindsight, but that's the whole thing, is you don't know what's going to happen in real time. And this is why I would just wait to be safe and wait for this. And that's when you go to the 2 minute, you could probably enter here like I showed you, versus taking that risky setup here and kind of gambling to see what's going to happen next, right? But it did work out, so I think you took it, right? If you did take it, that's great. I mean, you got it. That's good. Now, let's see what's happening here on NQ. I'm just going to flip back here. So, super small FVG here. Price is just ripping lower. If we're trying to figure out what's going to happen next, well, let's just go to the checklist for a second. Let's make this normal. How do you play this? Well, first off, do we have a higher time frame liquidity sweep? We do. It's off the 15-minute buy-side liquidity level. Premium and discount. We are on the right side of it, yes. Instant reaction, pretty good. Strong momentum through the IFVG, looks like it. Is there a clear drawn liquidity? Lots of LRLR here. We have the FVG down here, so that's also looking pretty good. Is it singular? Yes, it is singular. Is there a higher time frame IRL involved? So this is where you're going to have to go to, like, you know, the 4 hour, the hourly, maybe the 15. So here's the 4 hour. We are inside of a 4 hour gap, so that looks pretty good. Let's change that to yes. And you can see the IFVG is confirmed per the indicator. There's no SMT, so this is a pretty good setup, right? Now, I kind of missed placing an entry on this, but that's because I'm doing a lot of talking about other things. So we will just observe what's happening. But I would have taken a market order in this situation, and stop loss would just go at the top. And, you know, whether you're looking for 1R or you're looking for these liquidity levels, or maybe you're looking for this, let's just see what happens. I'm going to mark 1R because that's what I usually do. I just aim for 1R and I exit. So we'll see if this hits 1R. But having a checklist is super important, you know, because our emotions sometimes will trick us into taking setups, thinking, it's okay. You know, price looks really good. Maybe I can skip, you know, one of my criteria. But by having it here, it's forcing me to follow it, right? The only thing I don't like, once again, with this is just the size of this IFVG. But I'm not going to lie, I've taken IFVGs that have been that big, like less than 3 points before. This is a PM setup. So at this point, you know how price is like around here, my stop loss would immediately be going to break even now, right? I don't want to risk any, like, even if it takes me out, that's fine. I would just go back to, I would just set myself at break even. So I don't like to use set and forget with this. If I start seeing price, you know, tagging over 0.5 RR, like, I'm going to move my stop loss to break even. Because the best setups aren't going to flip over here. They're just going to continue rolling over. And if we look at what ES is doing, we need ES to obviously dump a little bit more, right? And this would then allow this to hit TP. However, if this flips London high into support from resistance, then this trade could be cooked. But, oops, let's go back here. Okay, there we go. So, I mean, It's looking pretty good. I mean, even taking TP early, it's okay, right? Like even right now, like it's okay to take TP early. It doesn't matter, right? Green is green. Especially given context of, the day, what ES might be doing. Watch it from this perspective. But do you see the difference now between what I talk about singular and non-singular? Do you see how price is just taking liquidity? It's not stopping like we saw with the ES setup earlier, right? The next FVG is here. That's the difference. So when you have a non-singular, or when you have a singular setup, it allows price to literally do what it's doing right now. Just literally go down. Because now it's looking for liquidity from here, right? It's sweeping all of that LRLR here. And there's that 1R. So this trade's a success. 1R trade, one and done. So if you risk $500, you just made $500. And you made $500 in 1, 2, 3, and 4 minutes. So for me, also, I will say, like, anything after about 11-ish or so, I would only be trading on evals. So this would be an eval play, right? And depending on, how much risk you're allotted, I know doing like a full port is not very possible anymore, given the consistency rules. So you'd have to split your trade in half, right? So if your goal is to get $3,000, you need two $1,500 days roughly. You see what happened here? You see what I talked about? Flipping a resistance into support. I told you how this would be a big problem for NQ, that we would need to see this go lower in order for this to go lower, and now we're getting the opposite of that happening, right? Because it flipped resistance into support. You notice how I took 1R, how I always talk about 1R, right? Imagine taking this setup, wanting to get more, 2R, and then this happens. You never know what price is going to do. This is kind of my point, right? In hindsight, we can look at price action, like even the IB that Matt took, right? No one knew price was going to dump 400 points or whatever, right? Most people that were taking that IB trade, we took the 1R and were like celebrating, right? Like we won the Stanley Cup, right? You never know what price is going to do. So for me with IFVGs, I was moving into a world where I started to skim profit at specific levels, right? So let's say, example like this, if price hit like 25 points to 30 points, which could be about, anywhere from 0.5 to 1R, I would skim some profit and then move my stop loss to break even. But what I noticed was that I was leaving a lot of money on the table, because a lot of trades would hit a TP1 and then go to break even. So this is why I've moved to trading in 1Rs, because now I can risk more money and exit faster, and then not get stuck in this kind of nonsense, right? Because if I had taken, like I'll give you an example, right? Like if I had risked $500 here and took full profit, that's $500. If I risked $500 and then at, 1R or even at 0.5 started taking 50% of that off the table, like that's nothing close to, if it was 1R and I took 50% off, that's $250. But if I'm taking 50% off, at like say 0.8, like I'm not getting anywhere near 250, right? I'm getting less than that. I mean, it is fairly close, excuse me. But my point is I'm not getting anywhere near 500. And then I'd be like, I just left $500 on the table. Yeah, I may have got between 200 and 250, but I left $250 on the table for no reason, because there's no telling what price is going to do. And this is why I like to also look at ES, because I need to see the reaction from key levels of what ES is doing, because both of these assets work together. Let's not go to the Stanley Cup, bro. Well, I'm a Toronto Maple Leaf fan, so I live in a world of pain all year long. All year long. Finance says for singular, if the FVG has already been tapped into, do those count? Well, once again, if you have FVGs stacked on top of each other, you're treating that whole area this is like what I would do. I would stack the FVGs together. So now whatever happens inside of that massive range, that is the IFVG. And that's why I said move to a higher time frame, clean up your chart, and try to get an entry above that level. That way it's super clean. So you're not even having to think about if an FVG is tapped into, because it's part of the setup. Now, if it's singular, right, then like I said, you're not going to have any FVGs here. You're going to have the FVG significantly lower, so it gives something for price to reach to, right? Like safe down here. But once again, I would just observe that and go, okay, price has something to reach for down there. I can see that there's liquidity here. I front run it, but this is all liquidity here as well, right? My goal is just to get 1R. Whatever happens, it doesn't matter, but my goal is 1R. Right? And then we even have more liquidity down here. And then we can also say a final target, if this trade were to have continued lower, that would be your daily EQ. Because we know the daily EQ acts as a very strong support and resistance level. Now we're starting to get bearish SMT. Once again, I use this indicator, ICT SMT by Fatty. It's free. Fantastic ICT, a fantastic SMT indicator. It really just maps things out on the chart right away. Makes my life a lot easier. I often talk about, if you're going to use an indicator, make sure it's making your process more efficient and it's not muddling up your chart. So for me, I don't have these indicators visibility on higher time frames. I only have them on the time frames that I need to execute on. So the 1 minute, the 2 minute, and the 3 minute. That's it. So if I go to a higher time frame, see how things start turning off? Right? Turned off, right? On another profile here, I have a bit of a slightly different setup on my NQ chart, not the split chart. So the interesting thing I'll tell you is the way I have my setup put together on this split screen is that this is set up for IFVGs. It will only show me IFVGs that trigger off of hourly liquidity levels. But the other setup I use, which is my main one, is taking into consideration the 50-minute levels. So just a little point of interest, but this is looking pretty good potentially. If this can rip through here, I mean, that's a nice SMT. But once again, like for me, this trade is already done. So whatever happens, it's all good. Take a look in the chat here. Like this FVG on your screen, price is already delivered from it. Okay, I see what you mean. You're talking about this. Okay, my apologies. I wasn't exactly sure. I thought you meant something lower, but like something here. So to me, this is actually a really good question, because I don't really know, like I don't have the right answer per se, like, because I see it work and I see it not work, but I've seen people on one side of the fence, if this has been already wicked through, I've seen people continue to use it as a level of importance. And you can see like price tagged right into this level, and you can see it's still being respected as a level of importance. So you can see this is a good example of why you would do that. But then on the other side, which is the side I've been on, which is like, well, the liquidity has already been taken, so this is no longer valid, right? We want to use the most recent price action. So that would be right here. So take that for what it's worth. I mean, I don't know what the right answer is for a question like that, because I think it's just about preference. But I have seen really good traders continue to use older FVGs that have already been mitigated. And you can see a reason why, right? Because look what's happening here. But for me personally, I would not use it. I would not use it. For me, if it's been taken out, it's mitigated. I want to use the most recent price action, not anything older. What happened here, why this happened here, I don't have a crystal ball. I don't know why or would have driven people to be buying here, but I would have thought this level would have got swept first, right? So maybe there is a psychological play happening here where a lot of buyers stepped in prematurely. Who knows? Or maybe they did this to trick people and trap everybody so that now they can go lower, thinking that if you're going long from here, well, then now you have SMT here and that's like psych, and now maybe it might roll over. So, I mean, these are just this is just speculation. But I mean, these are kind of things that I guess I would think about if I'm like really analyzing this price action, trying to understand like why did price reverse from here and what could price be telling me. This whole trading business is set up on confusion and illusion. So illusion meaning the price action, whoever is, like if it's an algorithm, if it's just, random retail and market maker volume, they're setting things up in a way to trick you, right? It's like a trap. And I know ICTs often talk about traps. And then when you start to see price go lower, it's because stop losses are just getting hit from people who got trapped going long, right? And then vice versa on the other way. So just going back to the trading day, I just wanted to quickly share that when the market opened, because I was talking about this earlier, this is what we had. Now, I'll tell you what I was looking at. Okay, I'm just going to switch gears here, so just hang with me. Market opens, and I was really watching what was happening here. Now, obviously, not right at open like we discussed, but I was watching this EQ area because I wanted to see price sweep it or get close to it. And I had noticed this setup form, and, it's 1034, 1035, but this is where like my rules have kept me, kept me safe because, I opened this up and I'm not on the right side of premium and discount. I'm below the daily EQ. So for me to be shorting here, even though there is a 15-minute sweep, it goes against the way I trade. So if I had entered here, stop loss, right? Now it sets up again here. You'll see, right? There's another setup that forms here. You got the 1.3 ADR there. Look at all the SMT forming on the opposing side now, right? I was really tempted on entering this position. I'm not going to lie. I was so tempted. I really wanted to because I thought this is close enough. But I decided to not do it just because of the premium and discount thing. And granted, price did eventually go lower right there. But the thing for me was, I was like, I'm not going to chase this thing. I'm just going to stick to rules. And if anything, I'll look for a long, because I knew there was sell side liquidity off the higher time frame down here. Unfortunately, nothing set up for me. So it is what it is. I took 0 trades today on my funded accounts. I took 0 trades on my eval accounts. And this setup is still actually valid because the way this indicator works is there's 2 ways. The first way is it will invalidate. It's all based off of a setting, but it will invalidate a setup if price closes back above the IFVG. That's one setting you can have. The other setting is that price closes above the swing point. So I have mine set to the swing point, right here. Invalidation condition, swing or close. Mine is set to swing. So that way it still stays active unless price closes above. Because most times, depending on where the IFVG is set up, if it's close to the swing point, I'll just use the swing point. And this is kind of why I just kept it that way. But once again, in a situation like this, here's your 1R. You're done. So I'm just going to take that off. 0 trades for me today. Later today, though, we got the IB happening for the Globex Asia, which will be fun. So I'm sure a bunch of us are going to be actively looking at the 6 to 7 p.m. range. But with this setup here with NQ, like I said, there's liquidity down here. Is all this a trap to trap people who are going long, right? Off of this one little FVG here, right? Is this a trap? We're going to find out. But there's lots of liquidity here, and there's lots of liquidity down here, and then daily Q once again. The thing with trading is you don't need to be perfect, I'll give you an example. If you look at Mr. Zink, I was very surprised to see that he was risking like $50 to $100 per trade. He's not risking very much. I was really surprised. But then I realized he's using 15 copy traded accounts. So if he makes, $200 on a 1 hour trade, he's actually made $3,000 on the day across all those accounts. And if he just keeps taking those base hits, that adds up super quick. And now if he's making $200 a day, let's say he gets to, $1,000, right? He's $1,000 in profit now. He's made 5 good trading days, right? So 200 times 5, but he's got 15 accounts. He's sitting on $15,000, taking $50 to $100 risk per trade. Unbelievable to think of it that way. But when you start to think of it that way, it really puts it into perspective that you really don't need to be risking, $500 per trade if you're copy trading, right? It's not necessary. But everyone's end goal is different. Some of us are trading with, one funded account. Some of us don't have a funded account. So, of course, your trading, risk is going to be very different than Mr. Zink or even mine, right? You're going to probably be risking a little bit more because you're trying to maybe pass that eval quickly. And now that you're in funded, you're like, hey, I need to get to the buffer. I need to get to $3,000 again if you got a 50K account, right? So you're not like risking $200 per trade anymore, because if you risk $200 per trade and get, $200 in a win, if you think about getting $3,000, but you're only making $200 per trade, you need 15 winning trades just to get to the buffer. 15 trades at $200 with a 1 hour, risk to reward. So in those scenarios, you got to ask yourself, like, how much are you willing to risk? Matt often talks about dividing your risk, like your liquidation, by 10. So if you have, a $2,000, drawdown, that would be 200. So then slow and steady. But maybe you want to risk $300, right? Maybe you want to risk $300 per trade, because now you only need 10 trades at $300. And 10 is a lot more attainable in terms of keeping you in check than 15, right? The other way to go about this, which I've seen with other people, is they will be more aggressive to get to the buffer. So the way they were aggressive to pass the eval, right? So maybe they're taking $500 trades per setup. So that means they're allotting for 4 losses, basically, because the risk would be $2,000. They would do the same on the eval, they would do the same on the funded side. So the goal would then be to get to $3,000 as quick as possible. So if I divide 3,000 by 500, that's 6 trades. So if you can get 6 winning trades of $500, you're now at the buffer. And then when you get to the buffer, you immediately cut your risk in half, right? So because you don't need to risk so much anymore. And when you get to the buffer, you're everything that is above the buffer is payout, right? So the faster you can get to whatever that number is for yourself to be safe, just risk a little bit less. I wouldn't risk $500 at that point. I'd be risking $250. That's what I would do. But everyone is going to operate a bit differently. Everyone is going to have a different risk appetite. You need to figure out what works best for you. Going back to the price action, interesting to see this thing roll over, right? I'm not surprised. Just given how we talked about things, I'm not surprised that it's doing what it's doing. And there's our liquidity right here, right? Now it's taken the liquidity. So even if I had taken the setup like this and my stop loss was at the top and, you know, I'm aiming for this level right here to be taken, you know, it still did hit that opposing swing point, which is a very valid level to consider because it's a draw on liquidity, right? There's another one down here, like we said, and then we have imbalances down here. So this could even go lower, right? Here's the EQ of the FVG down here. But notice how price is now invalidating this level, potentially, if this rejects on the underside, right? Something like this. And if you look at this, it's still the same concepts of support and resistance, right? Price went higher, went lower, went like this, and then eventually started to respect the IFVG, right? This thing right here. Started to respect it. You notice how it's flipping a key level from resistance or support into resistance, or respecting it simply as resistance. You'll notice this anywhere you go with price action. This is the most basic, and I say basic not meaning easy. I just mean when I first started learning about trading, I was learning about trend lines, and then after trend lines, I started learning about support and resistance. And, you know, we often hear, you know, buy low, sell high, or, you know, short from high and sell low. But the thing is, like, it all came back to key levels of interest and how price reacts off those levels. So you can see what's happening here now, right? Price, we're going lower. Now, I don't have a crystal ball. I don't know what price is going to do. I can just observe what price is doing and base some sort of analysis per that probability, right? So if price is continuing to respect the FVG, which is now the IFVG, then this should definitely roll over. And if we look at ES, we talked about how with ES, if price is flipping London high from resistance into support, then of course price is going to go higher. But if it loses this level, then that's really going to tank NQ, because NQ is already tagging a key 50-minute level up here. And it has more room to go down now versus London, or sorry, versus ES. So let's go back to NQ. This thing's tanking. Good setup. And once again, if we look at this FVG that was in play, that was now liquidated. Alice, what's up, brother? It served as a trap. It served as a big trap. Let's take that out. This was the trap. It lured people in. And, you know, the other thing too is, you know how, like, I was talking about how I would take 1R at that setup? Well, the second I close my trade here, that trade, because I'm shorting, I have to technically buy back the contracts, right? That's how it's done, right? The TP is a buy, you know, it's like a buy order. So buy orders are obviously going to drive price higher, right? So everyone who's buying here probably took 1R or was playing off this level here. So I think that's also kind of interesting. So both opposing liquidity levels have been taken on the sell side. Not bad. I'll keep saying this, but I think this IFVG indicator is one of the best indicators I've ever come across. And of course, because I'm trading IFVGs, it's going to work hand in hand for what I need to do. But I just think it's absolutely phenomenal. I love how it operates. I love how it marks things off for me. alerts me. Like, look at all the alerts I'm getting today and the way I've set it up. So it's going to give me, active setups, potential setups. Even before the liquidity is even hit, it's going to typically give me a potential alert saying there's a potential bearish IFVG going to happen, right? Let's see if we got one of those today. So 1343 is right here. So right here, 1343 is where we got that potential alert. And then 2 minutes later, it's telling us that it's active, right? Can you show setup? Do you mean like on the indicator? I can do that. Yeah, no problem. So, yeah, so I have all the alerts set on. The time frame of the IFVGs is per the chart. So whatever time frame I go to, the IFVGs will confirm per that chart. My history 5. I typically like to keep this at 0, so it'll only show me the most recent one. You'll see it's gonna make these disappear. So it'll only show me the most recent one that's in play. So if it's already been completed, then it will disappear. I think that's also handy. But when you're doing back testing and you want to see how price reacted, then you want to have more, right? So if I add this to 1, you can see it'll just keep the current one that's still active. Well, it's technically not active anymore, but the last one that was active. My bias being neutral, that's obvious. Up or down, doesn't matter. IFVG type is series. We talked about how we can stack the FVGs instead of just using a singular one if there's another one located directly above or below it. And then invalidation we talked about. So liquidity time frame, this is an important one because it's using ERL. Steve wants to see the SMT one, but I'll just quickly explain this again anyways. But, this is going to show me the different types of liquidity levels that are going to be in play, right? So on that other setup I have with the split screen, it's showing me hourly levels. And on this one, it's showing me 15-minute levels. You can set the time filter, so I don't need to know everything all day long. And then the size, right? The size of the FVGs can be, it'll only show you FVGs that are, based off how the algorithm is set on the indicator, or you can set it for custom, so it's only going to show you, FVGs that are 5 points. So this should disappear. There, it's gone, because this wasn't 5 points. For me, I personally just keep it on all, and then I'll just measure it myself and make that decision. So yeah, pretty cool indicator. If we look at the ICT SMT indicator, honestly, it's pretty like default, to be honest with you. Like, I didn't really change much. Just make sure your SMT pairs are good. And everything else pretty much aesthetics, right? So, but super cool indicator, honestly. I'm a big fan of it. So look at this buyback. Wow. It's showing me that there's SMT there. Is there a 50-minute level? So, depending on how you trade too, right? Like, some people look for SMT inside of FVGs, right? So there's a bullish FVG here, and you have an SMT inside there, right? Some people, use this as a form of trading, right? I personally don't, but some people do. And having an indicator like this is super helpful, because then you don't have to be, looking for it. Now, can you trust it 100%? Of course not. You can't trust anything that is not your own analysis 100%. But when it's working, it's really nice. So if I just go back to the 15, we already know the short played out from here. So this is gone. I'm going to just adjust the next level, which would be here now. I'll set another alert. And you'll notice we're above the daily EQ. So the goal is just to keep shorting if price keeps going higher. And if price eventually starts going lower, well, then I'm going to have to start flipping the bias back to longs, right? But in order for me to go long, I would need at least a 15-minute level to get tagged, which is right here, 50-minute sell side. So we can set an alert on that just in case. Happy Will says, do you still use POI for IFVG? Sorry if you already said it. I just got back in. No worries, man. Appreciate you being here with us, too. So do I still use a POI for IFVG? So a POI to me is a higher time frame external range liquidity. So I use 15-minute levels, hourly levels, and 4-hour levels. Majority of the time, a 4-hour level can become an hourly level. It can become a 15-minute level. It just depends on, how much you scroll your chart, right, based off of the time frame you're on. But I like to still identify those levels because then it gives me context that, we are reaching, say, like an H4 swing point is going to hold more liquidity than a 50-minute ERL, for example. It's not to say that a 50-minute level won't work. Of course it will work. It's just I need to be aware and always understand what's happening. So my POIs are those types of buy-side and sell-side liquidity levels. I don't use FVGs as a form of a POI, right? So often known as an internal range liquidity. I don't use higher time frame internal range liquidity to gauge bias or to gauge a trade setup. I will observe it for the single purpose of adding more confluence to my setup, and that's right here, higher time frame IRL. But it is not mandatory. These 6 are mandatory for me. Higher time frame liquidity sweep. So if we just go back to that setup we just, observed, and I showed you the 1R on it. We had swept a 50-minute level of liquidity, so that was the higher time frame liquidity sweep. We were on the right side of premium and discount because we're well above the daily EQ. We did get an instant reaction off of that 15-minute level. Now I took it off, but you can see it was right here, this level right here, that dotted line. Strong momentum is this candlestick ripping right through the IFVG, or the FVG, creating the IFVG. And then clear drawn liquidity, LRLR, as well as all the liquidity down here. And is it singular? Well, yes, it is, because there's no FVGs lined up here. This FVG already got mitigated, so that's fine. That makes it singular. This is a singular setup. And then anything else, like I said, becomes confluence. So if there's SMT, that's perfect. All it's going to do is just make the setup even more A+ than it already is. So you could say if everything is checked off, it could become like an S tier setup, right? How do I manage risk for a trade if you're manually entering? Okay, so, that's a great question. So in a situation like this, and we'll just take this trade, for example, okay? So in a trade setup like this, where, I already know everything looks good, I can already see where the IFVG will be located if it passes, like if it's going to confirm. So all I'm going to do is I set my position tool a little bit below, and I give it some, leeway. So something like this. Now, I've seen this candle like this. Let me just double check one thing. Okay, so what I would do is I'd probably have used this right here. And I would have had it marked like this. I already know my stop loss is going to be at the swing point. So now I know my risk is going to be at least 25.75 points. And then what I would do next is I would just hit the right click button. And you know what, let me just here, let me see if I can well anyways, I would hit the right click button. It would then open up the trading area where you'd set your contracts and set your risk. And all I would do is I would adjust my contracts to ensure that the dollar risk is within the range that I'm willing to risk. So it's not like a set amount of contracts typically. So given that context, I'll just kind of play around with it. Now in this situation, right, you have to also understand that you got to be quick on your feet, right? You got to think quickly. So if I know that, I was going to hold, I'm just throwing out a random number. Let's say I was going to hold 5 contracts here based off the maximum risk I wanted, but then price closes lower. I know that if I'm now risking 5 contracts here, but my entry is down here, I'm actually not at a 25-point risk anymore. I'm at a 30-point risk. So I might quickly just go, hey, you know what? I'm going to drop my contract to 4. But one thing I always make sure to do is wait for confirmation, right? So right here, I know there's confirmation. And at this point, I'm already got my contract set and my fingers already on the sell button. So I'm already waiting for this to just confirm. And if I know it's going to confirm within a few seconds, I'll even enter early, only on the 1 minute. And then I'll hit sell. And then I'll manually set my stop loss here. And then in terms of TP is taken manually off the buy button because I would be shorting, right? So as price does this, right? I talked about how when price was around it was about right here, I said I would move my stop loss to break even, right? So that stop loss that I had here, I would have just moved it, like $1 away from my entry. And then that way I know where 1R is, which is about right here. So the second price moves into that 1R territory, I'm literally just going to hit the buy button manually and exit my position. Do I enter trades on TradingView or TradeOvate? So I enter trades on TradingView with a master account. Everything's copy traded through Tradecopia. So I do have Tradecopia open on another screen because it's an app. It's a standalone app. In the event that there's issues with TradingView, like there's lagging issues with the orders going through, then unfortunately what happens is I have to use TradingView to set those orders, right? But the thing is that the account is still going to be copying from the master to the link accounts, because on TradeOvate, as long as I use the master account to place the trade, I'm good. So I always have TradeOvate open on one on one screen or one monitor, and then I have my TradingView open on another with the APIs connected and things like that. No worries, man. And the thing is, all this also takes time, right? Like it takes time to get used to these things. It takes time to understand how to become a little bit more routine. But the thing is, like, you do it once, you do it twice, you do it 5 times, you do it 10 times, and then it starts turning into a very textbook mechanical process. Like it just becomes like second nature to you. What's your system for taking partials and going BE? So I used to do this, and I had discussed this earlier, that what I would do normally is, like, if I hit like 0.5 to 1R, I would take 50 to 75% off that trade, move my stop loss to break even. But the problem I started noticing was I was leaving a lot of money on the table, because I'd get that TP, but then price would stop me out, and then it would go all the way to to full TP, and it's like, oh, that's max pain, right? When I started looking at the numbers of how many trades reached 1R that set up, that number was like 80%, 75 to 80%. So it got me thinking that if I just take full TP at 1R, and my data is showing me I get a 75 to 80% win rate when I follow my rules and I take, the most A+ setups, you only need 50% win rate to be break even on a 1R trading system, right? But if you're getting 75 to 80% win rate, 1R is plenty. And the beauty with 1R is I don't really have to stress out too much over the trade, because the trade is typically over in minutes. I just showed you this trade. This trade was over in like 4 minutes. And I came to this trade late. So that's how I would manage my trades now. So and once again, I said this earlier, but I'll say it again, but like if I was risking $500 on this setup, well, I made $500 here. If I had taken partials here at, say, 1R and taken 50% off at 1R, that means I made $250, and then my stop loss gets tagged out at break even. I just left $250 on the table. Do I know any of this is going to happen to the right of me? Of course not. Price could have just kept going higher, right? So in hindsight, we can go, oh, well, you could have, you should have just stayed in the trade, kept your stop loss at, at the swing point. But that's the problem with hindsight is 50-50, as it's, a cliche saying. But I would rather take that money off the table, and I'll explain to you why. When you are copy trading a handful of accounts, I don't need to wait for 2R to be profitable. I don't need to wait for a home run to be profitable. A great example, and I said this earlier, is Mr. Zink. Takes a $100 trade, wins $155. Maybe he wins $200, but he's taking that over and across 15 accounts. Do the math. As long as you just keep taking those base hits and are consistent, yeah, nothing's 100%. You're going to lose, no doubt. But if you can just keep taking a consistent base hit, then what ends up happening is you're going to get to the buffer of your funded account. And then after you get to the buffer of your funded account, everything beyond that is gravy. And if you just keep taking those base hits, you're going to end up with a monster payout, all from taking a risk of $100 or $200 per trade. Insane. So the biggest flaw in trading isn't actually the model, it's the person operating the buttons, right? It's us. So always keep your eyes or your mind on the prize. The prize is the consistency of compounding. If you don't have a funded account, that's fine. Everyone has a starting point. You have to slowly work at it. But if you know that your system is highly successful, go aggressive. Rapidly pass those evals with a high position, right? So once again, if you have a $3,000 eval to pass, with a 50% consistency, you just need 2 trades of 1,500, right? Now, granted, if you lose that one setup, you've lost 50% of your eval, but that's okay because that's part of trading. You're not going to win everything, right? So in those situations, then you might want to break your risk into, instead of 2 trades, you might want to break your risk into, say, 3 trades. So then that would be 1,000, 1,000, 1,000, right? Or maybe you want to split it into 4 trades. 750, 750, 750, and 750. Can you secure 4 wins in a row? And even if you lose one, that's fine. You just keep going at what you're doing. So depending on your risk and your tolerance and your personality, these are the options, in my opinion. I think once you have a system is working very well for yourself, don't waste time passing the eval. Even if you blow the eval, it's all good. That's you find me one funded trader or one massively successful trader that did not lose a funded account or that did not lose an eval. Happens all the time. It's part of the game. But the second you get to a payout where you've continued to hit those base hits and you've copy traded maybe, or even if it's just the one account, you're going to wipe out that debt that you had invested with all the failed accounts in literally one pay. I've seen so many people do this. And it's a really good feeling when you get there. And when you look back at all of the things that you did to get there, you'll realize that less has always been more. Less greed is better. Less time on the chart is better. Less risk is better. So you got to retrain the way you think if you're thinking too big. Because maybe, we're watching people get $1 million payouts, right? But all of that stuff is noise. Don't get lost in that noise. Do not get lost in that noise. It's not worth it. Don't compare yourself to anyone. Don't compare yourself to me. Don't compare yourself to Matt. Don't compare yourself to Dodgy or Kane or Jade Cap, right? Or even Mr. Zink. Don't compare yourself. You're going to lose the battle if you do that. Just focus on one trade at a time. Follow your rules, whatever they look like, to the best of your ability. Journal. Review. And it sounds it sounds lame. It sounds boring. But the reality is, if you can execute that boring strategy mechanically for the 1.5 hours and a bit that you might be on the chart, you now have the rest of your day to live your life and have that freedom, or work on other businesses, work on your health. That's why you're trading, right? And I understand the ramp up is slow to start. I've had to talk to my wife about this in the past, that, you know, the start is slow, but once the compounding starts happening, then everything is just literally accelerates at a tremendous speed. And you know exactly what I'm talking about, because you are either doing it yourself or you've seen other people share success stories that way. How many trades do I take in a day? Well, that's a good question. If I'm on a funded account, which is how I start my mornings, if I catch a win and I get my $300 to $600 in profit on that first trade, that's it. My funded trading is over. And anything I take beyond that is on eval. So on eval, like I said, I follow this, depending on how I feel, right? Depending on how new the account is, depending on the type of a setup I see, right? Like if I see a really, really strong setup, I'll probably risk a lot more money and take that risk. So I don't have necessarily a limit on how many trades I take on eval, because my goal is to just pass, right? Pass each account as fast as possible. How many trades do I take on funded though? Ideally one. If I take a loss on my first if I take a loss on my first funded trade, I'll take one more trade after that. That's it. But I personally don't have a trade number type risk. Like I talked about this in a previous live stream. Some people say I will only trade once and I'm done, right? For me, if I get the win, yeah, I'm done. But if I don't get the win, I then start to move into the world of the financial loss. So for me, my limit is not so much in how many trades, it's actually $500. I don't want to lose $500, I don't want to lose more than $500 on my funded account in one day. So for me, I have a lockout. So what does that mean? That means that if I risk $250 on my first trade and it's a loss, I have $250 left in capital to trade with before my accounts get locked up. So however I want to divvy up that $250 is up to me. Do I want to take a $50 trade? Do I want to take a $100 trade? Do I want to just take another $250 trade, right? You understand what I'm saying? That's how I operate. I feel like it takes a lot of stress off of me when I think of it that way, because now I have more flexibility to trade the remaining part of my day if I've taken that loss at the start. Now, if I trade that first trade and it's a $500 trade and I lost that $500 trade, well, my accounts are now locked. That's it. It's over. No matter what forms after that, my funded accounts are locked. I can only take evals after that, right? Do you have a system where if you lose this amount of trades in a day, you log off, or if you win 2 times but lose 1, you can still go until you lose 2 times? Yep. So just explain that, right? Just backtesting 9:30 to 11. The results have been really well. I may backtest the PM session and trade to maximize the gains. Have you tried New York PM session? The only reason I would ever trade New York PM session is to trade evals. That's it. It's the only reason. Otherwise, my funded accounts will not touch a PM session. The reason being is the highest probability setups are not forming in the afternoon. They're forming in the New York AM session. That is where all the volume is. So you always want to be more defensive than offensive. Just because the setup forms in the PM doesn't mean you got to jump in with 15 funded accounts on the trade. You might see someone on Twitter do that, but like I said, don't compare yourself to these people. You have no idea what they're up to. We just recently saw that one dude who basically lied, right? I think he was showing he'd made $700,000, but he's basically a break-even trader, and he doesn't have much to show for it. He was a big fraud. You don't know what these people are up to, right? And I'm not even saying, I'm not asking you to even trust me, but I don't show anything because I don't need to show anything. And I don't want to, right? It's private, the way I look at it. I mean, I'll share some stuff, but, I'm not asking anyone to join my Discord. I do think it's important if someone is running their own Discord to be transparent with things, of course. But once again, like, there's so many liars out there, man. Like, especially the ones that are just nonstop posting on social media, win. Like, where are the losses, right? If they're sharing losses, that's good, because we know that that's healthy. And it's no judgment to any of these people. I don't know any of these people. It's just, I'm a normal person just like everybody else. So I'm going to have, skepticism towards, how honest some people are. And truth be told, like, I got rid of my Twitter and my Instagram off my phone a couple weeks ago, and I just deleted it. So the only time I can even go on Twitter or Instagram is if I'm on my desk on my laptop. Now, what the hell just happened here? Holy moly. What happened here? Is there some sort of news? Because that is a huge spike. Something happened. Oh, there it is. Trump, the U.S. will ensure the free flow of energy to the world. Is that what pumped the market? Because that is a huge candle. Oh my goodness. There was no news. Holy shit. 90.1 minute candlestick. Where do you set your stop loss? Swing high or a bit above the IFVG? So, this gets a little bit tricky because it takes a bit of practice in the placement. So if we just go back to, let's just go back to this NQ setup for a second. Right here, this one, right? So if I was setting this up, because the FVG is really small, I would just use the swing point. Now, if this IFVG was bigger, right? Like, let's say it was like, something around, the size of 8 to 20 points, then what ends up happening is I will set my stop loss a little bit lower, but I usually use candlesticks to gauge that. So it would be something like this, for example, right? Like, I might, if this was a much larger IFVG, then say my entry was a little bit lower, then I would have set it a little bit above, and I probably would have used this candlestick that created the IFVG. I would have just used that candlestick to set that up. Ideally, stop loss wise, like, I'm looking for 25 to 40 point stop loss usually, because if I'm looking for 1R, then that means on the other side I needed to run 23 points or 30 points or 40 points, right? So how valid or how viable is that? You have to also accommodate for that too, right? That flip side. That's why I always look to see where the liquidity is, and I measure that out, because if the liquidity to get to 1R is only 5 points away, then that tells me the setup is most likely it could fail. Hey, no problem. Happy. Well, appreciate that. Exactly. I know Finest been going at it in study mode recently. So, I 100% agree with him. Small stops. The best setups don't break back through the IFVG. And this is why the size of the IFVG matters, because when you have IFVGs that are this small, of course price is going to blow through it, right? But if the IFVG is larger in size, like this right here is a very nice IFVG, right? This is a beautiful size. Unfortunately, the setup is long gone, but this is a beautiful size FVG, right? So this is about 20 points. Like I said, that's a perfect size FVG. So like, let's just say your entry was around here, right? You could set your stop loss like right here. So it was 20 points. Some people like put it even a few points below. The way I would look at it though, and I think it's just everyone's risk is different, but you see this level right here, which is the liquidity sweep level. I personally would have probably just kept it right under that, and then I would have just targeted for 32.75 points, right? And you can see that aligns very well with the liquidity up here, right? and whatever price is going to do is going to do. But if you keep using massive stop losses like 50 points, then you now need price to go 50 points. If you use a 100-point stop loss, you need price to go 100 points the other way. Is that viable? Does price have that much momentum? No. The IFVG model is more of a scalping thing, right? You're scalping a volatility. You're scalping the momentum. And being a reversal trader, you're scalping the momentum for price to flip the other way, much like it did here, right? We watched price keep going higher, and then we just scalped 1R right here. And no matter what happened after, the whole point was just to catch this. That's the whole point. That 1R base hit is enough to change your life. And if this was a funded trade, like, that's it, your day's over, right? Sure, the trade happened at 143, but it took 4 to 5 minutes to play out. Anyone else got any questions about anything? Mika's in the chat. What's up, brother? Hope you're doing well. If you guys aren't following Mika on in the Discord, I mean, he's got his own channel. Make sure you're following him. I mean, he's posting a lot of amazing analysis in there, I'm not sure if anyone's reading all of it. Maybe you're skimming it. I try my best to go about it, read through it every day if I see stuff there. Really, really good content. And I do also want to say, Mika's a huge inspiration even to someone like me, because even though our life situations might be different, I know he had left his job to take trading full time. And I mean, that is a massive, massive, massive move. You know what I mean? Like, huge. Oh, appreciate you sharing that, brother. There you guys go. You can see where it is. And, the amount of people Mika's also helped, man, in this community is just insane. Like, he's helped so many people. Even, it could be newcomer type messaging to more advanced messaging or questions, right? Iman, what's up, brother? Good to see you. You made it. Been running this thing for too long, though, so I'm going to be closing it up soon. Is Lucid working fine? I can't put limits. I also had some problems with TradingView. The API, it wasn't connecting. It was not showing me setups activating on TradingView, but it was showing me that it was still working on Tradovate. So be very, very careful. I forgot to mention that. I apologize. What did he say here? I'm planning to be a lot more active in my analysis channel. Thanks for the love. Hey, no problem, man. No worries. No worries. And I'm doing well, like, we've had a really good live stream. I think we discussed, I feel like every session we run, there's a lot of great questions, and I always see things that I somehow find a way to talk about for like an hour. So I find that funny, but today's been good. We talked about IBs, and then of course we talked about NQ with IFVGs and things like that. So, and liquidity and risk. So a lot of good stuff talked about today. And the thing too is, like, you'll notice at some point, like, we might be talking about the same thing over and over and over again with slight nuances. But when you start to realize that that's happening, then you'll start to understand how mechanical the process is, right? And you'll start understanding more about how to apply that into your own trading system and your own trading profile, right? So let's end the session there. I think it was a great one. I really appreciate everybody being here today and the support and the love. You guys are awesome. I appreciate everyone engaging. And I really do hope everyone enjoys the rest of their day. Just like Steve said, good luck to everyone at Globex today. We're all going to be Globex traders during Asia now. It's funny, I was thinking with all the IB trades that are being taken, it's like the AshCap Discord is slowly moving from unicorns to initial balance traders now. So I find it very, very interesting. Super cool. Yeah, so we'll be back for that, all right? And it'll be pretty fun. Yeah, Ash's Globex trade. We're going to have to change the Discord name. Yeah, for sure. That's actually a really good thing to quickly talk about. I just remembered. Let me see if I can just find my... Okay, right here. So there's a couple of ways to go about this in terms of the runners. And you're noticing people use standard deviations and things like that. So, for example, like this indicator I'm using, I've talked about it before. It lists off 2 and 3x extensions, right? This indicator is free. Initial balance wave map. I've talked about this before. Trider Drysdale, I think he's an influencer, but he trades, I think, the IB with some variations, but he's got it set so that it shows extensions as well. That's one way to go about it. The other way to go about it is the ranges. So you would just use standard deviations. You can take your Fibonacci. I have mine already set like this, and you would just measure out your extensions, right? So you can see this guy's indicator is showing 1 extension, 2 extension. Not sure if it's showing the 3rd extension. Let me see. So it's showing 2 and 3 extensions. So that's right here, and then that's right here. You can see it aligns with -1 and -2, right? So you can use the standard deviations, which is, like I said, through Fibonacci. It's super easy, 0 fib, and then just set the 1 fib, gives you the anchor, and then -1, -2, -2.5, -4, -4.5. Another setup I have with standard deviations is this. Is instead of using -2 and all that, I'm using Fibonacci levels. So those levels are like 2.618, 4.236, and 6.86. You can test those out and see how they do. I mean, it's pretty far away, right? But it's just another tool that I have that I can use to analyze what price is doing. If we go back to Asia session quickly from yesterday, I just want to take a quick look at what that looked like, and then we'll end this thing. So it would have been right here, right? So this is, this is 9th. Whoops. Made a mistake. Sorry, let's try that again. 6 o'clock. Okay, and then replay. Let's see here. So let's take this off. So we're looking for 6 to 7, right? So that's about here. Let's go to the 5-minute just to make it a little bit neater. 6:35, 7. Okay, perfect. So there we go. So if we're looking at it, here's the extensions, right? With the standard deviations using 2.618, 4.236, 6.86, right? So some correlation to 6.86 here as the final range. If we use the other ranges, like standard deviations right here, nice reaction off the -2. Let me make this a little bigger so you guys can see. Sorry. Right, so -2 to -2.5, nice reaction. -4.5 and -4, price just smoked right through it. So, yeah. And then if we look at, let's just set this to 1800 and 1900. Make sure it sets properly. Did it? Yeah, it looked like it did. So you can see here, even with that indicator, it's got the -2 and it has the 2 times and 3 times extension, right? And you can see how price reacts off that 3x extension. So, and then a huge imbalance down here. So anyways, just, food for thought, things you can do, things you can play with. Me personally, I'm good with just taking 1R. I'm happier like that with life, and I don't have to worry about things. But, when you see Matt taking a $7,000 trade that you also took successfully, all you can do is shake your head. And like I said a little bit earlier, don't compare yourself to anyone. And I even have to take that advice. I should never compare myself to Matt or anyone else for that matter. So appreciate everyone's time again. Hope you have a great one. You swear there's going to be some of us trying to beat Ash's trade from you. Yeah, we're all going to go for 10K. Let's go for 10K. Let's do it, man. Maybe collectively we'll all get there. Anyways, folks, really appreciate your time. Thanks, Vic. Appreciate you. Appreciate you guys being here. And today's Tuesday. I will be back on Monday next week for the next stream. So next week will be a Monday, Friday stream. I'm probably going to be shifting back to that schedule now. But yeah, appreciate you guys. Thanks, Finest. Mika, appreciate you as well, man. Once again, everybody check him out in the Discord. Can't miss him.